You want to do the clap today? I know you love it.
I can't
Make it good.
Ready?
Yeah, it was a good clap.
I feel good about the clap.
Hey, welcome back to This is Florida. We got some exciting stuff today. Today, we want to talk about why real estate is an inflation hedge.
Absolutely, Nate. We've been talking about inflation. You hear about inflation when you get on Facebook. Who knows what it is? Who cares what it is? Let's try to beat it, right?
Yeah, so inflation's out there. It's here. No doubt you can look at it. We can look at the number of listings on the market. We can look at, if you bought something at the store that was $5 last year, it's $5.50 this year. That is inflation. I don't care about the statistics or whatever else. Exactly. People are feeling it. Even close to Halloween time, trick-or-treating, Shauna's like, there's way less people handing out candy. And I'm like, that's because candy's expensive.
I was actually offering to buy back candy from the kids yesterday because Target, they're selling 80 pieces. I think it's $12.99, something like that. So I'm offering $5 for 80 pieces. I feel like that's fair.
Right.
But the point here is we're not getting into what causes inflation. We're not getting into the macroeconomic side of it. We're staying in our lane. And we're going to talk about how to hedge against inflation.
We're going to tell you how you can protect your money. We want to keep your money in your pocket and in your bank account. Okay, Josh, explain to me, though, why real estate is a hedge of protection against inflation if home prices are coming down.
Absolutely. If home prices come down, if home prices go up, it doesn't matter. Your house is on a fixed rate mortgage. So it doesn't matter if you have that for 10 years, 5 years. It's going to stay the same no matter what happens with the economy.
Remember, the data isn't month over month. It's year over year. Real estate is a long-term game. So let's get right into it. First point is, as home values rise, you already touched on it.
Yeah.
As home values rise because of inflationary pressures, fixed rate mortgages stay the same. So what does that do to your equity?
That means you continue to build equity. Obviously, as you pay down the loan, you're building more equity. And as those home prices begin to rise, maybe you're not paying attention. Maybe you're just living your life, paying your mortgage. Your home is increasing in value.
The next thing is, if you're a landlord and you hold real estate, so instead of putting your investment money into the stock market, which crashes and burns when inflation happens, you put it into real estate. As rents go up, your mortgage stays the same. There's a high turnover, and those rents go up. And we can look at that. That's twofold. If you're a renter and not a landlord, you can anticipate that you're going to start paying more because as inflation happens, your rent rates are going to be raised.
And this is something we've talked about before on the This is Florida podcast. We talk about rent. It's a way to generate income from your real estate transactions. And making money and using that money to make more money is what it's all about.
That's what it's about. So that's why we're so passionate about real estate because, for one, you are paying the same thing month over month. So as inflation happens, we look at rents in my neighborhood. If you bought a house in there 5 to 7 years ago, your mortgage is $1,200 to $1,400 a month, but the rents in my neighborhood are $2,500 a month right now. And that's because over the years, they've crept up, and then you get these inflationary markets where they just explode. And that's where we're at.
That's exactly where we're at right now. The last 2 years, we've seen historically high rent increases, and that is expected to kind of continue. So if you are one of those people who own that home and are renting it out, you're seeing a little bit more money in your pocket.
Hey, if you like what you're hearing, then sign up for our email list.
Head on over to nateriggsofficial.com, register, follow along with all the socials so you don't miss a thing.
That's right. It's all there. And while you're at it, go to joshlovely.com, apply for a mortgage so we can help you start buying some real estate and building some wealth today. So, Josh, you got some stats for us there. I think you've got some, not 5-year stats, but a long-term
stats. So I'm going to pull it back to 1990. Home prices, while we've seen the economy go up, go down, we've seen different presidents, different everything, right? 350% increase in home prices since 1990. So that means if you bought a home in 1990 and you've kept that fixed rate mortgage, which, that's a little bit rare, your payment has stayed more or less the same while your home has risen in value 350%.
That's incredible. 350% over the last 32 years, right?
Yeah, and if you haven't listened to our how to have a net worth 40 times your neighbors, this goes right back to that.
It goes right to that. I know we said we weren't going to talk about it, but we need to talk about it.
The hot tub?
No.
Oh, okay.
We need to talk about the recession because it's in that period. I think it is important. I know we kind of didn't want to be doom and gloom, and we try to avoid that, but There was a major housing recession in the middle of that 30 years, and you still saw a 350% increase. So when those who are sitting on the sidelines out of the game are criticizing you and telling you you're making a bad choice purchasing real estate, they just don't know what they're talking about. They can't see this data. So if you buy, think about it today. What if today at 30 years old, I don't care what the interest rates are. I don't care what the house prices are. You go out and you purchase a house as an investment today. Where is it going to be in the next 30 years?
And this is something, if you don't know anybody who bought a house in 2008, 9, 10, that time frame, when interest rates were through the roof, home prices were crazy, crashing, who knew what was going to happen? If you bought a home in that time frame, you have seen a substantial increase in value over the last 15 years. I mean, it's incredible how much money you could have made if you came into the market at that time. And talk about hedging inflation. Oh my goodness. I mean, if you've had that fixed rate mortgage since 2010, inflation's, it doesn't even matter to you. You could make any move you want.
Doesn't even matter. So that is why we promote real estate as a hedge of protection for your money, even in inflationary time periods, even with high interest rates, even where prices seem to be sliding down. And okay, even better, prices are coming down. So purchase a home while they're coming down. You know, a lot of people think that the big players time the market. I wish we had a dry erase board here. But they don't really time the market. And what that means is they don't try to sell at the peak and buy at the bottom. The money's not made there. The money is made, those people who play those games are the people who go broke. The money's made in the middle as it's just transitionary, coming down, making those purchases. That's it. As it's coming up, making those purchases, sitting on them, holding that real estate. That's where the money is made, and that's where we are at right now.
Yeah, and the key word, I think, is a steady increase. The fact that it's steady, right? So don't expect that you're going to buy a home today and make that money in a year. We've said this before on the podcast, right? If you're looking to hedge against inflation, buying a house today, you're going to be paying about what you'd be paying for rent. But in 5 years, you're going to be paying a hell of a lot less than you were paying in rent.
And we try to keep it simple. It might sound like we're just hammering the basics week after week after week. Well, I tell you what, when all of us master the basics, we can start talking about something else. When you're holding 10 real estate properties, then we can start talking about some fancy things. But right now, we're just, what we want to do is just spread the knowledge of like, hey, anybody can do this, but not everybody will. And we're just trying to encourage you to get out and do it.
Yeah, and that's something I tell people all the time is if you want to go down this rabbit hole, I will happily go down it with you. Let's pull the string until the sweater is gone. I want to make sure everybody I talk to, number one, understands what they're getting into. Because while it is an unbelievable hedge against inflation, this is the biggest purchase people are ever going to make in their lives. Top 5 at least if you buy 5 houses. So happy to answer any of those questions. I know Nate as well is happy to help find that perfect home that you know is going to help you beat inflation while hanging out with your family and enjoying the good things in life.
We've got all kinds of programs. So, okay, well, in summary, man, as home prices rise, your mortgage stays the same, your fixed rate mortgage stays the same, and you build equity. If you're renting out those properties, then you're going to see an increase in your cash flow year over year. If you're renting, you're going to see a decrease in your cash flow year over year due to rent. And over the long term, real estate always increases in value. No matter what we've gone through in this country, it has always increased over value. It's just the way it is. Yep. So
we may see small increases at times and we may see larger increases at times, but absolutely, it always seems to be going in the upward direction.
Well, thanks for joining us today. If you'd like some more information on protecting your money from inflation, you need to get in touch with Josh and I.
Reach out to us in the comments, like, subscribe. We'll get right back to you. 904-563-4651 is always the best way to get in touch with me. My phone's right here.
And you can go to nateriggsofficial.com. All of my links are there to all of my social medias. You'll see this blog. You'll get the notes on this. The data will be there. You can search for a home there, or if you're thinking about selling your property and cashing in, we've got tools for that too.
Head on over to joshlovely.com for the free calculators on there. I think there's a link on Nate Riggs Official that'll take you there. And again, happy to talk and answer any questions. Anything else, Nate?
That's it. We'll see you next time.
Bye-bye.